And good afternoon. Welcome into Market Talk on this Thursday, May 5th. Great to have you with us here on the Cinco de Mayo. Thanks for joining us and making us part of your day. I'm your host, Jesse Allen. Find us online. MarketTalkAg.com is our home on the web. You can find all of our radio affiliates there, streaming sources, our news of agriculture, much more. It's all online at MarketTalkAg.com. Well, we have plenty to discuss in the market trade here today. Wheat was the big leader to the upside, with corn and soybeans finishing up fairly firm. Stock market taking a beating today. So there's a lot to talk about. Let's bring in our good friend Bryan Doherty with Total Farm Marketing to join us this afternoon. Bryan, good afternoon to you, sir. And no doubt a busy day in the trade once again here today.
Yes, right on. Very busy again. Lots of wheels turning, lots of movement. Another big day in the stock market, which is just getting pummeled today after a huge up day yesterday. We're taking all that back and then some. So it's kind of, let's call it never ending here. It just there's no rest in the marketplace. Wheat up 30 cents, beans up 6 to 8 in that area, corn up 3 to 5. Continued uncertainty with weather and temperature outlook. Actually, some of the support in corn, in particular wheat, may have come today from temperatures forecasted in the 90s in the Western Plains.
Yeah, and let's stay on that wheat market here today. That was the big winner. Kansas City wheat was our upside leader. That hard red winter wheat. I know reports out of Oklahoma that we could be down some 50% from a year ago. A lot of worry about that crop that missed out on some of those rains in some of those key areas, or they saw some severe weather affecting things. Just your thoughts with this wheat market. Throw in worries about India's crop, throw in the planting delays in the northern plains. There's a lot to unpack, it seems, in these wheat markets right now, Bryan.
I think you hit all three. So there's three things this week in the wheat market. One is India indicating they would likely ban exports of wheat. So the signal to the world is between Ukraine and India, it's like holy cow. This whole world food supply could get precariously tight, or it, maybe not so tight as in just countries saying, we just need to keep it in house. We need to be careful, cautious, or simply we just want to have it. So there may be some rethinking about what it means to kind of be a just-in-time inventory world. That is, it's always there. You got a source for it. Prices stay relatively range bound. There's good weather, good crops. All of a sudden, we've been challenged with not only challenging weather, but also things like a war. And then you look at the weather here in the U.S., and it's right. It's twofold. In the north, above normal temperatures, above normal precipitation continues to evolve in the 6 to 10 day outlook. You get down in the western plains, some got very meaningful rains. Some was light. Western Kansas, very light totals. Panhandle spotted, but again, light in areas. And one farmer I talked to today in the Panhandle said, if it's not irrigated wheat, whatever rain we got now, it didn't really do it any good, anyways. It's beyond help. So you got some real dynamics in that wheat market starting to percolate that market firmer and solid gains today across the board on all three exchanges and starting to look like it might want to take another run toward the top side.
Well, and even seeing some 12s on some of those spring wheat contracts here today. And, you couple that with those planting delays up north. Yeah, I'm sure growers would love to get a spring wheat crop in at those prices, but the delays in the northern plains are looking to be fairly substantial. We'll have to see. Now, you mentioned this, though, turning our attention to corn and soybeans. Weather looks to be warming up, maybe giving us a window here in the 7-day forecast to get some meaningful planting done. Because, we look at the calendar, May 5th, not a lot of work done. We're starting to, at least with corn, kind of get a little antsy, I think, Bryan.
I think the market's a little antsy. I think farmers who are looking at continuous rain and wet weather are very antsy, and with good cause. I mean, if you're let's say a central western Illinois farmer, typically you're kind of done by now or getting real close to wrapping it up, and many of them haven't even started. So the anxiety level is growing. Yet it's May 5th. The most recent, again, I'll refer to the 6 to 10 day outlooks. Basically, you can draw a line from Michigan and just go southwest or go like to a 7 to 8 o'clock, 7 or 8 o'clock on a clock, just head that direction. And Everything there looks to be above normal in temperature, below normal in precipitation, and that is the third 6 to 10 day in a row forecast with that same pattern. So, in theory, the eastern regions of the Corn Belt, where they've been kind of stop and start, picking and choosing, looks like it could really open up and really push wide open. And then I would also comment that the rain this past week in the western Corn Belt that delayed planting this week, it almost looked like the market voted and said, "Hey, the rain is still more important than some rain delay," because some of those areas were just critically, dry, and some of those areas, southern South Dakota, those regions, somewhere 3 to 5 inches of nice, let's say, subtle rain over 2 or 3 day windows. So really brought some positive attitudes out of farmers who were just wondering if they were ever going to see some rain again.
Yeah, a lot of things to look at. I think it'll be interesting this next week if we can get that planting window to open up, make some progress. I wonder what that could do to the market, as well. Stock market, you mentioned that too. Just taking a beating here today after the Federal Reserve announcement yesterday and the rally. We've given that back, as you mentioned. That dollar creeping higher. So, I mean, you look at the stock market fundamentals and the financial sector, how does that weigh into these grain markets here, just with everything swirling around that side of the coin right now, Brian?
Great question. So money begets money. What that basically means is money's always looking for opportunity, and it really, in its sense, it doesn't really care where it is. It'll look for it. So when you're looking at tight supplies, or let's go back to Minneapolis wheat, contract highs established today, really in a steep uptrend there. The money might be buying wheat rather than equities because equities are not working so well right now, and maybe the money will wait for better signs that it's time to move more aggressively into equities. And it's not unusual. It's not unusual. We see money move out of commodities, especially if we think the cycle might be peaking, and then move over into the equity sectors. So right now, you've got probably what's really interesting this year, in the last maybe 2 years, because of the worldwide pandemic. Everything's been worldwide. So the war in Ukraine affects everything worldwide. Pandemic affects everything worldwide. Logistical concerns, shipping backups in China, shipping backups here, unloading, loading. All of that is worldwide. And so we're really seeing just how small the world is and how impactful a drought in Brazil is, how impactful uh, India's decision this week really is. And the backdrop behind all that is you've had basically 2 to 3 years of leveling off of world production of coarse grains or some declines. And that's maybe the bigger story is, where do we pick that up and keep that uptrend going? Is it in yield? Is it in acres? Read an interesting article this week on China. They're not adding any acres over the last 6 to 7 years. Um, it's got to come out of efficiency. There just aren't acres to add. So where does the world look for acres? Well, it'll try things like Africa, certainly Brazil, Argentina, but there's only so much you can add at a time. And Africa's been a big struggle with drought and disease issues, pests, those type of things. So it's an interesting dynamic. Um, just how, when you have less than ideal crops, we all got kind of used to it. The whole world got used to it for several years between 2013 and 2000, let's say 21. We could also say 2019. That ended up being but there was several years there nonetheless that really, the world was in good shape. Supplies were plentiful. That's not the case right now. It might take a couple years to pull out of this.
Brian, as well, weekly export sales and shipments. Any thoughts there? I know shipments wise, especially the corn side, was very good here today. Any thoughts of what you saw there for the week?
Yeah, shipments good. Sales in corn were okay. Sales in beans today, 17 million bushels old crop. Well, that's 17 million bushels more than the USDA has forecasted for the entire year. So the story could be in soybeans that, look, we've got to increase the export sales, the USDA, for the 21-22 crop, which means beans on hand, and that just lowers carry out for this year and smaller carry in for next year. So another dynamic is really the strong export pace, whether it's Ukraine or the drought in Brazil or both. that, typically we don't see in the winter months as the world can source other inventories coming to the US. All fall, all winter, we heard early winter people's, the argument was, well, we're way behind last year. Well, last year things were cheap early on. A lot of countries front loaded. Now we've just continued to see strong buying because of need, and the market is picking up those inventories through higher prices.
Brian, let's move over to livestock. A decent day on the hog market here. Some good strength there. What are your thoughts on what you saw in lean hogs today?
Nice recovery, second day in a row. Nice bounce off the 200-day moving average on the June contract. June posted a very, very ominous bearish key reversal on March 31st, and then managed to form this really outstanding looking textbook head and shoulders formation, which both of those signals could point to weakness. And lo and behold, the market broke this neckline on this head and shoulders formation. It basically went right down to the 200-day moving average. And what we've got pegged is sort of the area ish where price would fall to. And that was near 100, $101 in June. Now we started to bounce off of that. So we're starting to see, I think that the buyer look at this and go, okay, now we got some value back in the hog market. It got over its skis, overheated a little bit earlier in the year. So we like what we see there. I don't know if we're bullish, but we like what we see. We got to get, kind of past pandemics and shutdowns elsewhere, which really bleeds into the cattle market. The cattle market has bullish fundamentals, with the exception of this month's cattle on feed. We take with a grain of salt, poor wheat pasture conditions, Jesse. That is just not going to make well for placements. They're going to be heavy and you're going to see more cattle on feed. But the overall bigger number isn't changing. If we're putting cattle in the feedlot faster, they're probably going to come out a little faster. So ultimately, again, I'll continue to echo. I think the back month's got it right. 157 on April next year is running what, a $24 premium to where we are right now. The market believes tighter inventory and probably better demand down the road, especially if China comes out of its COVID lockdowns and COVID doesn't spread worldwide with lockdowns.
With the cattle market, would you attribute most of today's selling pressure to the sharply lower stock market? That's what it felt like to me.
I would put it all on the stock market today. It's an interesting scenario. We've been friendly cattle all along, based on supplies and expectations that coming out of the pandemic, consumers would really go at it. The problem has been you have pandemic problems in China, so perceptively or real, that cuts maybe into the idea of higher cattle prices in the short term. But more importantly, you've got the consumer looking at high inflation and paying a lot of money just to get to the grocery store, and then you start wheeling the cart down the aisle, and you kind of look at those higher price cuts, and you're just kind of gulping. Uh, you'll use less. You'll buy chicken, pork, whatever's cheaper, whatever's on sale, and that's kind of the negative. Now, the positive out of this is if China brings itself out of these lockdowns, it'll coincide with right about the same time we get into our summer months. But here again, we've had a drag. We've had 30 days of cloudy, cool weather through much of the nation, particularly in the Midwest where people love to get out and grill. So I'm hopeful we get our grills fired up here as the temperatures warm up and that we, buy and use beef anyways. But those are some of the headwinds that beef has right now. It's just high energy prices and high inflation and a cautious consumer.
How about that dairy market today, Brian? Seeing some green on the screen there, especially in class three milk. What's your thoughts on what we're seeing this week in dairy?
Yeah, so we've seen some volatility in dairy, but also, a market that has been losing its upward momentum. And in fact, today, as an example, if I look at, let's say, the June contract, 24.23, a great price for milk, pulled off its high of the day, but the market was trading at this price back in the first week of March. So now we've gone over 2 months and we're basically trading the same price. We've been higher, we've been lower. I think there again, it goes back to inflation. It goes back to cautious consumers and looking at things in the grocery store. They're high priced. Um, the dairy industry, though, has its struggles: high input costs, lack of labor. These are things that probably keep prices supported for a while, but probably aren't enough to sustain a bull market unless demand can improve. We saw this week global dairy trade was down in just about every category. Big reflection of either less interest at higher prices, pandemic, or both.
Brian, I appreciate the time as always, sir. Before we run out of time, any final thoughts you have for us today?
Well, the volatility continues, and with that is opportunity. So embrace it. Know the marketing tools. I think for grain farmers, brush up on if you haven't, or learn short dated options. They may have a real place for you, and those are options in November. Soybeans are the futures contract, but they're a shorter time window. So know how to use those. So July short dated has an expiration date in June, but those may be really large as far as good tools to use in front of reports or expected changes in a weather forecast or just unexpected changes in the weather forecast. So learn the short dates, talk to your advisor on those. Um, the equities, I don't know. That looks kind of ugly. I'm sure I'm going to have people asking if we should buy. I don't know right now. It just looks really poor. And then I guess the third thing would be just stay on top of things and stay safe.
Definitely. Well, if producers need a little advice figuring out their situation, maybe learning about, some different tools they have in the toolbox, I know they can reach out to you and the folks there at Total Farm Marketing very easily. What's the best way to do that, Brian?
Thank you, Jesse. Best way is first give us a phone call, 800-334-9779. So we'd love to talk to you and take a 5-minute conversation and find some value in it for you. And then secondly, if you want to just take a look at us, you go to our website, totalfarmmarketing.com. Or if you're an email person, want to shoot me a question or two or a situation, Bryan at totalfarmmarketing.com. Just shoot me an email.
Very easy. And again, all the information as well online, totalfarmmarketing.com. With that, Brian Doherty, appreciate the time on this Thursday, sir. Have a great rest of the week and weekend. We'll talk to you next week.
Jesse, very much appreciate it. Keep up the great work. Your listeners got a great announcer here, and we're happy to be working with you. These are exciting times, and let's embrace it and run forward.
Well, I appreciate it, sir. Have a great one. Thank you.
Awesome. Yes, sir. Thank you.
Brian Doherty with Total Farm Marketing, our guest today on Market Talk. That's going to do it for the show on this Thursday, May 5th. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.